Hi everyone, this is Jason Burack of Wall Street for Main Street, and I'm back for another commentary on the markets and the real economy. Today's commentary is about the inflation occurring in food prices and portions of food for your favorite items you buy at the grocery store or order at restaurants. I will also be discussing how this inflation is permanent and will almost certainly worsen in the years ahead and will not be transitory or temporary like Ben Bernanke and others want you to think. Let me explain why I think less bang for your buck, less purchasing power for food at restaurants and grocery stores is very likely, as this fits in with financial repression and the U.S. government and Federal Reserve's plan to do a controlled U.S. dollar, U.S. debt, and entitlement devaluation in real terms. I will also explain how and why things like the Bureau of Labor Statistics, or BLS's Consumer Price Index, or CPI, and other price measuring metrics for the real economy, like MIT's Billion Price Project, are missing this clear inflation in food. A lot of it has to do with the fact that many restaurants, retailers like Wal-Mart, and large, well-known food manufacturers like Kraft are intentionally keeping prices of food items the same, but are dropping portion sizes by as much as 40% already in the last 24 months in some cases. If the price of your favorite restaurant item says the same, but you are receiving a lot smaller portion, it's still inflation and a loss of your purchasing power and an erosion of your standard of living, unless you are investing, trading, or speculating well enough each year to beat the real inflation rate. Metrics like the CPI and the Billion Price Project only measure price changes, so clever food manufacturers and restaurants in the private sector have figured out how to fool these metrics and consumers alike by keeping the price the same but reducing your portion sizes tremendously. While consumers of food may not fully notice their portion sizes changing immediately, the companies themselves are readily admitting they have growing and serious inflation or higher input cost issues that are not temporary on their conference calls and when the companies speak to analysts covering the company. Companies like Kraft and many others involved in the food and restaurant value chain readily talk about margin compression due to inflation from higher input costs to make their products. I listened to a number of CEOs in the food industry admit in public, on CNBC and other business programs for TV and print media, how they are experiencing at least 5 to 6% inflation on their input costs, and that was the floor. My educated guess is some other companies in the restaurant and foodstuffs industry have not controlled their costs at only a 5 to 6% increase, and these other companies have inflation and higher input costs running up to 2 to 3 times higher than that. There are also credible reports out of China that food inflation there was running at over 20% annually for much of 2011. I think it is very clear that food inflation is a growing global problem. Unfortunately, I think companies are going to have to keep doing this just to stay in business, as they will not be able to charge consumers higher and higher prices to offset an increase in their input costs from inflation. A higher oil price is also inflationary, as oil and its related petroleum products are a very important part of growing and transporting food from locations of often over 1,500 miles before the food gets to you, the consumer, at the grocery store or restaurant. From my own personal experience grocery shopping for myself and occasionally dining out at restaurants at different price points with varying menu items, I also noticed that my grocery bill seems to have gone up more than 20% in the last 6 to 8 months, and my portion sizes are on a steady, rapid decline. And that's just to buy the same amount of food in the past, and I'm receiving noticeably smaller portion sizes on many of the grocery items. The CPI's famous and well-documented uses of substitution, hedonics, and geometric weighting cannot accurately account for the fact that restaurants and manufacturers of foodstuffs are getting very clever in their packaging and portion size reduction tricks to fool us consumers into thinking we are not having a reduction in our standards of living. Neither can MIT's Billion Price Project accurately tell us the truth, especially if the price stays the same but our portion size is cut by 40% or more. I encourage you, dear listeners of GoldSeek Radio, to pay more attention to the labels at the grocery store to check for yourselves to see if you are still getting anywhere near the same portion of food for the same price. In many cases, I doubt you are, and unfortunately, I only expect this powerful fundamental trend to worsen as the Federal Reserve and other central banks continue to create more paper fiat currencies to keep the world economic system and capital markets from collapsing into a full debt deflation from free market forces. Food inflation is not temporary. Unfortunately, I think it is here to stay. A controlled U.S. dollar devaluation, producing continued and worsening stagflation in the real economy in the U.S. with a higher real unemployment rate and inflation in food, energy, insurance, and other important consumer staples we cannot fully cut back on or substitute and have to use to survive is here to stay. I encourage listeners of this commentary to email us at Wall Street for Main Street and share stories of their loss of purchasing power in food with myself and my team at our main Wall Street for Main Street website at http://www.wallstforminst.com. I will be using some of your stories about portion size reductions and other stories of inflation in your everyday life on food, energy, and consumer staples for a future podcast we at Wall Street for Main Street are doing about how inflation is worsening despite what the government statistics say.